Okay, good morning, everyone. Apologies for the slightly delayed start there. Technical issue. Welcome to Wednesday's seminar. This morning we are lucky enough to be joined by John Sharp, consultant solicitor for Silver Shemmings Ash, who's going to be talking to us about professional indemnity insurance and design liability post Grenfell, what is promised to be a very popular topic by the amount of people who've signed up for this. As always, if you have any questions for John, he's happy to answer them. Please use the Q&A tool in the bottom panel of your toolbar. And indeed, if you have any specific questions for John, his email is johnsharp, that's Jon Sharp @silverllp.com. If you don't particularly wish to raise them in an open forum, he's always happy to have an email and will respond to you directly. So without any further ado, John, good morning.
Good morning, Julie. How are you?
I'm good, thank you. I shall hand over to you and allow you to stun and entertain us all.
Good morning, ladies and gentlemen. I'm not sure about stunning and entertaining you all. I think that's a bit over the top somehow. Professional Indemnity Insurance and Design Liability post Grenfell. First of all, credit where credit's due. I prepared this with a gentleman called Phil Lamb from MPW Brokers, who are part of the Clear Group. About a year or so ago. Unfortunately, due to the current restrictions, Phil can't join us. But on the subject of Clear, good morning to you, Mr. Guy Burbidge, who's our insurance professional there. Without further ado, ladies and gentlemen, that's me. All my details are on the website, and the less said about him, the better, I suspect. I've also added Phil's details here. Phil is very much an insurance construction expert, as are most of the people at Clear, and I'm sure they'd always be happy to assist you. So we're in a hard market. We are in a hard insurance market for the first time since 2002. And it is a particularly hard market for the professional indemnity side. So what causes a hard insurance market? Well, major market-wide claims. So not just your average, I don't know, professional indemnity claim on a construction policy. That's fine, insurers for that will have plenty of reserves, but it's a market-wide loss. So that would be something along the lines of a major hurricane, something like Hurricane Katrina. That would be described as a market-wide loss. What else causes a hard market? Well, insurance capacity. Now, in late 2018, Lloyd's of London, who have a number of syndicates operating underneath its umbrella, and who have the benefit of the Lloyd's of London basically emergency fund, which will assist insurers in the event that they run into difficulties, it conducted a survey of all of its insurers operating under its wing. And it became concerned about solvency margins because basically they were giving lots of cover out and not charging enough premium for it. And Lloyd's got a little bit concerned about this and said, well, you're either going to have to start charging more premiums or you're going to have to stop writing the business. And guess what? Lots of people just stopped writing the business. In addition, there is much more market regulation at the moment about insurance companies and the solvency margins that they have to keep. And gone are the days, I'm afraid, where a gentleman who operated in Lloyd's called Mr. Posgate or Goldfinger basically wrote as much risk as he could for as much premium as he could and just hoped that the claims wouldn't come in. In the end, actually, he was extremely successful. But that type of underwriting has now long since gone because all insurance companies are regulated by our good friends, the FCA. So the last hard market was in 2002, and what caused it? Well, you might remember 9/11. That was clearly a market-wide loss, aviation, property, etc. And those losses sort of filtered through into the market in 2002. I remember renewing my professional indemnity renewing our professional indemnity policy for the firm I was then with, and the premium went up about £20,000. And I said to our broker at the time, well, hang on, I wasn't particularly involved in 9/11. He said, it doesn't matter, John, it's a market-wide loss. Insurers will want to get their money back. And at the same time, in 2002, we had the worst floods in Europe in living memory. Most of Europe was underwater. And again, that caused a major increase in market-wide losses. However, that resulted in a short-term increase in premiums market-wide, and it was basically all over within 18 months. Premiums started to go down again, coverage started to extend, and we have been in that sort of market since 2002. There has been lots of competition for business. There's been plenty of capacity to write that business. And as a result, premiums have been relatively benign and relatively low. However, 2018, and I've said 2019 now, but it's 2020 and continuing for the foreseeable future, we now have a very, very hard insurance market. Premiums will have doubled or tripled in most cases. And the reasons, well, Grenfell. Now, I've said there the impact was discussed by Phil Lamb. In fact, it will be discussed by me, but I'll come to that later. There was the Lloyd's review, previously mentioned, and a small other issue called the 737 MAX. Here's the summary of the Lloyd's review. I've explained what Lloyd's concerns were. You're writing business, not charging enough premium for it. If there is a massive series of claims, you will not be able to cover your losses. They carried out this review. The outcome of the review meant either you raised your premium or you stopped writing the business, and the resultant impact was the withdrawal of a number of insurers from the PI marketplace. Now, the Boeing 737 is an insurance headache. Boeing, as we may know, excuse me, ladies and gentlemen. Excuse me. Boeing were commercial jet dominant from 1955 until 1990. And here's a variety of their aircraft all happily flying around the place. Does anyone remember flying, by the way? It's been so long since I did it. It started off, of course, with their iconic Boeing 707, a number of which are still in service today. This was a tough, rugged aircraft, and really was the first one because it flies much faster than most modern jets, flies about 600 miles per hour. It meant you could start doing London to New York in about 5 to 6 hours. Then Boeing launched the 727. They thought the 707 was a good idea, but we'll make a smaller one, 3-engined, and it can do 2, 3, 4 hour runs. That became the most, I think it was, still is, the highest selling aircraft in the world. And of course, we've all just seen poor old BA having to retire its 747s, iconic aircraft made luxury travel possible, etc., etc., etc. And Boeing had no real competitors. It had McDonnell Douglas and a company called Lockheed, until, that is, Airbus arrived. Airbus was first thought of in 1964 at the Farnborough Air Show, and it took that long for the European countries to actually get their act together and agree that actually having a European built aircraft through Airbus might actually be a good idea. And launched in 1987, its success has been remarkable because it went wide-bodied, it used advanced technology, it had the benefit of the technology from BAE and Aerospace, who were its two of its founder members, that they acquired from Concorde, and it secured 50% of new aircraft orders since 2003. The Boeing 737 was Boeing's little trick up its sleeve, though. It's a most successful commercial jet. It started off fairly small, but the top left picture is what the 737 used to look like. But now, in its latest model, Boeing launched the 737 MAX. It was built in response to Airbus's A320. The A320 is, if you've been on one, easy to operate them all, operate lots of them. You'll find that when you're on board a 737, there's plenty of power. You still feel an oomph in the back of your in your back when he puts the power down. Get on a Ryanair 737-800, not really. It sort of rumbles along the runway. Well, I think I can probably take off. I'll give it a go. And whilst very safe, not a particularly comfortable aircraft. And these issues were reported to Boeing, in particular the power issue. And Boeing said, oh, we can cure this, we'll make a 737 MAX and we'll put bigger engines on it. And we'll also not make it too complicated, so you still use your same spares. And so it did, I also did an IT upgrade. IT is not Boeing's strength. They made 4 different versions of the 737 MAX, all with increasingly sophisticated IT, and one of the bits they put on it was an MCAS system, a maneuvering characteristics augmentation system. The MCAS is located in the nose of the aircraft and senses the trajectory of the plane, correcting its flight path in order to move safely into oncoming wind. Poor maintenance of these sensors led to the aircraft thinking that the plane was travelling sharply upward. This is known as exceeding the angle of attack, the angle at which oncoming air flows over the plane. When the plane exceeds this angle, air no longer flows over the wing, and one aspect of the process that keeps it airborne, the plane tried to correct its flight path erroneously. This is in relation to the first crash, and nosedived into the ground. And in the wake of the Ethiopia crash, a number of pilots in the US have claimed they've experienced the same issue with the MAX. So shortly, whilst the MCAS system was designed to make the aircraft more efficient, it doesn't work. As a result, the aviation regulator stepped in and grounded all the 737 MAXes wherever they are in the world. There are, I think, some 393 jets grounded around the world. And there's no sign at the moment of them flying again anytime soon at all. So, first of all, we have to deal with the total losses. There were 3 fatal crashes, unfortunately. A 737 MAX 7 has a 100 million price tag, and its more sophisticated elder brother has a 135 million price tag. Passengers liability, that's limited by convention, so frankly, not a great deal. And of course, the baggage claims were very, very small. But in addition, grounding a fleet of that size give rise to an insurance claim. Boeing have grounding liability coverage. They also, part of the aircraft managing product, they have liability coverage. Boeing is said to have 500 million sublimit for grounding liability, and their product liability policy is some 2.5 billion. Now, not all of these losses will have come home to roost, but the aviation market in particular has charged very low premiums for a number of years, even when in 2014 we had the worst year ever for total losses. It didn't really affect premiums. So when all these losses come home to roost, this is not going to be helpful. Now, there is one other matter that I should inform you all about. As we all know, and this will make a hard market even worse, we are going through this pandemic, COVID-19. There was a huge outcry at the start of this because many businesses had bought business interruption cover. Now, there are different types of business interruption cover. You can have, if you bought a basic policy, you will have some form of business interruption cover, which will cover you in the event that your property suffers some form of physical damage. I use my fish and chip shop example. You've got a fish and chip shop, you've opened it up in a nice enough area, you're making nice chips, nice crispy batter, you're doing very well. Through no fault of anyone's, one of the fryers catches fire, and there is a fire in your building. You have to close for 3 months. That's fine. Insurance policy will respond and will pay for the repairs to your premises, but it will also, even in the most basic policies, pay you a sum of money for the 2 or 3 months that you are shut. It will either be based on profit, it will be based on turnover, but you will get some form of business interruption cover. Now, the more expensive policies had what's called passive cover. Now, this is where there is no physical damage to the property, but there is some form of an outbreak of a disease on the premises, or you've been forced to close your office by the actions of government. So when COVID-19 hit and we were, people started to claim on their business interruption policies saying, oh, well, this is a disease, pandemic, notifiable disease, I've got cover for that. And saying, well, I was told to shut by the government, I'm claiming on the policy. The insurance market's reaction was one of, oh, sorry, COVID-19, it's got nothing to do with us. Sorry. Which caused a huge outcry, as you can imagine, which led in the end to the regulator getting involved, the FCA, who regulate the insurance market and the banking market. And they launched a test case taking to court, I think, 7 insurers, some 29 policy wordings. And these have all just been looked at by Lord Justice Flo and Lord Justice Butcher in the Commercial Court. And they have found that, yes, indeed, there is a cover for business interruption in these circumstances, depending on your policy wording, admittedly, but that there is cover. Now, this is not good news for the insurance market, already beleaguered by various other problems as well. It's now going to have to start paying out on some of these policies. Now, there will be lots of arguments about quantum, so what you can actually claim for, but nevertheless, this is going to have a big financial hit on the insurance market and will make a hard insurance market even harder. Next week, everyone, of course, after the first instance decision of Lord Justice Flo has appealed, and it's going leapfrog the Court of Appeal is in the Supreme Court next week for a 3-day hearing. Everyone who has wanted to appeal has been allowed to appeal. That includes the FCA. So whilst there is not certainty yet that insurance policies will have to respond, I do not believe for 1 minute that the House of Lords are going to overturn the decision. They may tinker around the edges with it. There may be a couple of insurers who can walk away slightly more than they have before, but it's very unlikely that this decision is going to be overturned. Therefore, the insurance market will suffer losses. And what does it do in those circumstances? It increases premium. So not only is we already in a hard market with increased premium, we are also going to now have to, all of us, pay for the money that Lloyd's expend in covering business interruption claims arising out of COVID-19. Well, of course, the other major issue that's affected the insurance market, especially the professional indemnity market, is, of course, Grenfell. So what happened? Well, the hotel was built 1972 to 1974. It was a 24-story tower block built, as we know, in one of the richest boroughs in London. Excuse me. Renovation took place 2015 to 2016. Ryden Limited carried out the refurbishment with the cladding installed by a company called Harley Facades. The works include new windows, a water-based heating system, and aluminium composite rain screen cladding. The original cladding system proposed was rejected, and a different combination of cladding panels with lesser fire-resistant qualities was used as, guess what? A cost-saving measure. What then happened was, unfortunately, as we know, the building caught fire. And like many London tower blocks, a stay-put policy was in place in the event of fire. The concept is that a box would be created by the thick walls, effectively, and fire doors, which would allow sufficient time for anyone who's an individual in a flat for the fire to be brought under control. However, the design concept of the building never envisaged a full evacuation of the building being necessary. It was assumed that these boxes and the fire doors, etc., would allow time to evacuate the building properly, put out the fire, etc. However, there is speculation that the original design concept might have been undermined by the subsequent refurbishment works, and in particular, the rain screen cladding system. Fire occurred on the 14th of June 2017. Early in the morning, never a good time for a fire. Fire broke out on the 4th floor flat. It was caused by a domestic appliance. Approximately 1:08, the fire breached the windows and rapidly spread to the outside cladding. The spread of fire was rapid and a major incident was declared at 2 o'clock, and 40 fire appliances plus command vehicles and operational platforms were engaged. Staple policy was abandoned, but not, regrettably, until after a prolonged length of time, and 72 people, very tragically, as we know, lost their lives. Ladies and gentlemen, will you just excuse me for 1 minute? I've just got to grab a tissue. I do apologise. Terribly sorry, ladies and gentlemen, apologies. The local underground station adjoining buildings, and that was all affected as the risk to them was evaluated. People from the surrounding properties were evacuated and facilities were opened to provide temporary shelter. And relief centres for those directly affected. Monetary and other assistance was offered in the immediate aftermath to try and help those affected. In addition, the Royal Borough of Kensington and Chelsea embarked on a voids programme utilising the empty housing stock to try and rehouse those affected by the fire as locally as possible to where they were originally living. Day after the fire, Theresa May announced that there would be a full public inquiry, and this would be chaired by Sir Martin Moore-Vick. Public hearings commenced in September 2017. The report, phase 1, was officially released on 30th of October, although much of its findings and contents have been leaked. I still find it amazing who goes about leaking all this stuff. I don't see everything to do with COVID's been leaked. I don't quite understand who this leaker is. However, the report particularly focused on such areas as the fire brigade response, the staple policy, which has been much criticised, fire brigade training, the cladding products, building control sign-off, and domestic appliance fault. Legal action is underway between all the parties and the inquiry is continuing. In May, reactions to the fire, well, May 2019, the government announced they would fund replacement of ACM cladding on private residential buildings. Cladding remediation fund is for the benefit of leaseholders and residential buildings over 18 metres in height. Building owners are expected to pursue reasonable claims against those who install cladding and/or insurance warranties or pursued under the Effective Premises Act 1972. And any monies recovered must be repaid to the government. So as said, the insurance industry is bracing itself for this raft of claims. The whole system for building regulations in the UK was condemned as not fit for purpose by an independent report. Major causes, well, confusing rules, a lack of enforcement, and a culture of behaviour practices were all held up to criticism by the author, Dame Judith Hackett. The abiding impression drawn from the report was that safety was the least priority in considering construction building standards and practices, a race to the bottom, as it was described. It is, I suppose, unfortunate, but it is nevertheless true that price rather than quality tends to drive construction projects. Whether that will change in the future, I'm not sure. There are some new types of contract out, the JCT Constructing Excellence contract, for example, which try to remedy some of this. But it is almost endemic in the culture of the industry and will take some time to change. But it is going to, unfortunately, have to change. Changes to building regulations, July 2019. They were changed in relation to the requirements of fire safety of the envelopes of building. Revised approved document B deals with external construction, external services, insulation materials and products. So how these things are going to work in practice is unclear, but an emphasis on more rigorous enforcement via inspection bodies will clearly prove vital if effective changes to take place. Fire safety issues are and will continue to be at the forefront of thinking on all levels going forward. Now, the insurance market has traditionally provided coverage for alleged allegations of negligence in respect of design and specification in respect of construction professionals. The JCT design and build contract was first introduced in 1981 and established a key single point of responsibility on the part of the contractor for all the design and construction elements. And the insurance market, to be fair, has been familiar with covering construction professionals and have moved to provide cover for this new contractual feature. Insurer appetite for design and construction professional indemnity risk widened, and new insurance entered the market throughout the 1980s and the 1990s. Indemnity limits, which had been initially written as on an aggregate basis, were increasingly offered on an any one claim basis, as the premium levels attracted more capital investment into the UK market. So basically, wider cover, smaller premium. Many mainstream composite insurers, Aviva, Sun Alliance, etc., entered this arena and put further pressure on downward rates. So, going back to what I said right at the start, this is a classic situation. You've got everyone wanting to buy into this type of business. There is plenty of capacity. So to try and distinguish one insurance company from another, what they do is offer a wider cover to you, but at a lower premium. So you have low premiums, lots of cover, and this all works very well until something goes wrong. We are in a totally different place at the moment now with regard to professional indemnity insurance, and will remain so on the best view for another 3 to 4 years. Again, going back to what I said earlier, professional indemnity insurance was identified as the second worst performing class of insurance in Lloyd's, following a view by the chairman of Lloyd's in 2018. Premium levels, because of the competition, have continued to fall. Claim settlements were high and their frequency was increasing. Lloyd's got so worried about this that before the review, it had put 5 insurers on watch, i.e. we're watching you, we are keeping an eye on your solvency levels, which you have to maintain under the market's regulatory rules, and indeed the rules put forward by the FCA. And 2 of them, they just revoked their membership and said, go, we don't want to know you. You're writing too much. You're not charging enough premium. You're going to get out. There is Brexit concerns as well, particularly with regard to the construction industry. Does anyone remember Brexit? I think that was that thing we all talked about before COVID-19. The Grenfell Tower case, the potential for claims against design and constructors and construction professionals has massively affected the market and the insurers' appetite to write their business. It is one of the most dramatic market realignments witnessed in a single business line. Whilst all premiums are going up, this professional indemnity is the one which has really, really increased by some huge margins. I have heard from people I know within the market stories of in 2017, a company dealing with construction risks paying 100,000 in premium, now paying 600,000 to 700,000. The landscape has changed completely, and insurance buyers now face a massive insurance cost, cover implications, and are placed in a very difficult contractual provision. Remember, in your JCT contract, you have to have insurance. As I said, many insurers have already withdrawn from the market. Capacity is reduced, premium levels increased dramatically, policy excesses have increased. The normal trade-off for having a high excess is a lower premium. We've all seen it with our car insurance. What excess do you want? If you want a £500 excess, you're going to pay more than if you say, actually, I'll carry the first £1,000. But not in this case. Policy excesses have increased because that's all you're being offered. Limits of indemnity are being reduced and are being altered to aggregate cover. So instead of being able to claim multiple times in a policy year, they can't do that anymore. They're going to aggregate all the losses together and give you a maximum number of claims. Fire safety, combustibility exclusions are being applied wholesale. This is absolutely true, and it's going to be a real problem. So, I'll give you a very practical example. My son's about to buy a new build flat. If it is built, he's just waiting for the surveyor to sign off. Now, he's buying in an existing structure. It has no cladding on the walls, nothing, because it's already there, it's already been built. And it's under 4 stories high, so it does not need to have any real ESW1 sign-off. Surveyor is refusing to sign off on it unless there is ESW1 signed by a fire safety officer and an expert, despite no cladding and despite the fact that it's less than 4 stories. And why is he doing that? Because insurers have slapped into his professional indemnity policy an exclusion which says, again, they will have nothing whatsoever and no liability at all for anything to do with cladding, combustibility, fire, anything, nothing. They don't want anything to do with it. And that exclusion and similar ones will be going into everyone's professional indemnity policies if they are not there already. So these impact on design and build contractors, specialist trade contractors, construction professionals, particular impact on approved inspectors. So what's this going to do? Well, increased costs affect budgets and ongoing cash flow. Increased excess levels will again impact the application of aggregate limits of indemnity. Might put some contractors in breach of contract in the terms of third-party warranties. The fire safety combustibility exclusions have a similar impact upon contract warranty obligations. Also, in your JCT contract, as I said, you've got to have insurance, but the word used is if it is available at a commercially reasonable rate. Well, is cover now available at a reasonably commercial rate? Given some of the increases I've seen, I'm not sure whether that is the case. So where does that leave you with your JCT contract? The answer is I don't know at the moment. But when premiums double, you can live with that possibly. Triple, maybe. But when they are quadrupling, is that a commercially available rate? So this is going to be a significant issue affecting the industry. It hasn't only just affected construction professionals, etc. It's also had an impact on our professional indemnity renewal this year, which has gone up by about a third. It will affect accountants' professional indemnity renewal. It will affect any sort of professional who has to carry a level of professional indemnity insurance. If you are going to want good quality insurance, so written by an A-rated insurer with a tried and tested market policy wording, you're going to be paying a lot of money for it. The options are, of course, well, let's get a policy from Russia. Yes, people try that, but the problem with that is that I've got about as much chance of enforcing a judgment in Russia as I have of flying to the moon. So where does this leave us? Those involved in design and specification in the construction industry now have a significant problem. They can't secure the coverage they are obliged to secure. What cover they can get is significantly curtailed and very costly. They have no wider cover for past activities, as a claims-made policy applies for cover to apply on the basis provided at the time the claim is made. They have a backlog, therefore, of potential risk. What can you do? Well, look at your contract. I always say this. Look, firstly, actually, the starting point is to look at your existing policy wording. It will have changed from last year's. So if you are renewing at the moment your new policy, make sure you read the policy wording to make sure that it's covering your business for what it's designed to cover. If it's not, go back to your broker and say, actually, we need this. Now, your broker may well turn around to you now and say, can't get it. I cannot get you cover for that activity. But please do ask the question. Also, look into your contracts for your warranty obligation. Research and document any projects where you specified or were responsible for the external cladding. Cladding is going to be a real issue. You say the word cladding to an insurance company at the moment, it runs away. It doesn't want to know. And it's very unlikely, and it will wriggle to try and get out of any liability for cladding put on buildings in the past. You need to source product data sheets for cladding as well. And going forward, you will need to start qualifying your tenders. You'll need to start looking at your contracts in more detail, something that I regret the construction industry is not the best at. And you'll need to qualify your tenders so that you are not liable for certain aspects of the work, which you would have been quite happy to do before, but that's when you could get some insurance cover. Now you can't. You've got no option but to qualify some of the work that you put forward in your tender. When you're renewing, you need to start work early with your broker. So when I renewed this firm's professional indemnity policy, knowing that it was a hard market, I was in contact with our broker from June. We don't renew until the end of September. I was getting together the information so that I could give that broker as much time as possible to get me the best price and he could in the market. So start early. Insurance now, instead of being something that you could just buy and you could then put in your top drawer and think, well, that's fine. Now it's a real issue. Somebody within your organization needs to take control of this because it is not going to be easy for the next 3 to 4 years. Arrange meetings with underwriters to ensure that your business case is put forward well and the best possible terms are achieved. Clearly, your claims record is going to be vital now. If you've made a couple of claims over the period of 10 years, you will still have a good case to say, well, look, we're a good company. We don't cause you much pain or anguish. Can we get some extended cover for this and this? Underwriters might do it, but they'll be doing it on a case-by-case basis now. Check your documents to record the insurances of other parties who are involved in the design process, either engaged directly by you or who will become your responsibility. Make sure they've got some insurance cover. Very often that gets ignored. Don't do that now. You want to find out the people that you're working with, what sort of insurance cover have they got, what it covers them for, and how much they're covered for. Being covered for £1 million sounds a lot, but if that's all the cover there is for a whole year, it's peanuts. So in conclusion, ladies and gentlemen, we are in, as I hope I've made very clear, the hardest insurance market since 2002. It is an insurance market that is going to remain hard and difficult for at least the next 4 years, if not longer. And instead of insurance being something that was readily available and you could go away, buy it once a year, get maximum coverage and forget about it, now you are going to have to work it. So in your companies, you need to decide who is going to be responsible for insurance, bearing in mind you've got higher duties of disclosure anyway under the new Insurance Act. And insurance now needs to be taken seriously. It is not something that we can just pick the phone up and get. It is going to be much harder, much more costly, and more importantly, with restrictions on the amount of cover you can buy. So thank you, ladies and gentlemen. That's all I was going to say. Oh, hello, Julie.
Hello, John. Yes, I'm back in the room. Right, we do have a couple of questions. Someone here is saying that they're leading a framework which aims to attract micro SMEs. They're reducing the PI cap to 2 million, but even this level has been deemed to be too high for many of the companies they've engaged with. Do you have any advice?
Well, the advice is, I think, really to shop. All you can do at the moment is just shop around and see if you can get someone to reduce those limits. There are some very good brokers out there still. I mean, obviously, I've mentioned Clear earlier, but I can't just mention them for obvious reasons. So there's and there are others as well who have access to different markets. You really do have to just, though, to some extent, shop around. But if you've got a good broker, you should really be doing that for you. But unfortunately, it is just a sign of the times. At the moment, as far as construction risk are concerned, the insurance market doesn't like it at all. It's still waiting for the outcome of Grenfell. Still waiting for who's actually liable for all of this. That will be a massive claim. So at the moment, it really doesn't like the construction industry. And yes, okay, it sees an opportunity still to make some money, but it's really going to charge you an awful lot for the privilege.
Yeah. Okay, someone else here is asking, it seems that clients or landlords or their insurers are casting their net of blame much wider than around designers, to anyone and everyone involved in construction or refurbishment projects, even to those who traditionally do not specify design, for example, QSs. They're saying they understand this because government help is predicated for a requirement for the assisted to recover the costs from whosoever they can. Is this your experience or just hearsay?
No, there will be, I dare say there will be firms of solicitors out there, not one that like ourselves, but others who will be encouraging everyone to cast their net a little bit wider than is absolutely necessary and to fire at everyone. The reason sometimes you fire at everyone in a course of litigation is to make sure that eventually some mud sticks and you get some money from someone. It's a dangerous gambit because people, if they defend it, if those that really haven't got any direct involvement defend it to the end and they win, then you're going to end up paying their costs. But sometimes it's used as a start of litigation to flush out the guilty, if you see what I mean. Everyone has to put a defence in. You look at their defences and say, right, okay, it's these people. And you can then say to the others, right, you're off the hook, you can go. But yes, a scattergun approach does not surprise me in the slightest. The disadvantage, and one of the things that I probably haven't mentioned and should probably just do now briefly, the disadvantage with being a professional is that, in any industry, is that they know you've got professional indemnity cover. They know that there is an insurer sitting behind you with a deep pockets who can pay. And therefore, there is always a temptation, even when actually no one has really done anything wrong. People do tend to do this simply because they know that the professional indemnity policy is there and in place. So in our profession, everyone knows we have to carry it. Or you do get some unscrupulous people who make claims when really there is no justification for them at all.
Yeah. Okay. Right, well, that appears to be the end of the questions. Unless anyone has anything else they'd like to put to Mr. Sharp, then we will say thank you very much for attending this morning. Have a great day. John, thank you as always for your time and interesting presentation. As always, we always like the ones with pictures of planes. And we will hopefully see you all again soon. Our next scheduled seminar is next Wednesday. If you would like to book for that, we're talking about leave site now. That's termination, leave site now and don't come back. Please email seminars@silverllp.com. And if you have a specific question for John, don't forget, it's John Sharp, that's Jon Sharp @silverllp.com. Thank you everyone for joining us. We'll see you again soon.
Yes, thank you everyone. Everyone stay safe. Thank you very much, ladies and gentlemen. And as Julie said, if you've got direct questions, always happy to answer them. Please just email. Thank you very much. Thank you, Julie.
Thanks, John. Take care.
Bye-bye.